I don't want to like come on and speak fake news.
All right, fellas, we're off.
When's that ever stopped us?
The mouse is running.
So this is a new computer, new rig.
Oh,
Jake's
yeah.
on one too. So maybe there'll be fewer hiccups. I don't know. Maybe
I'm
there'll
on
be
a
more.
guest computer.
This is Value After Hours. I'm Tobias Carlisle.
Yes,
Got
he is.
Bill Brewster and Jake Taylor here. As always, what's happening, fellas?
Hola, amigos.
How's
we
this
doing?
market
Down here.
treating everybody?
Living La Vida Loca in Miami. Hotels on Collins Ave. I could have found a quieter place. Shout out to Jason Buck for putting me in the noisiest hotel in the entire world. Thank you, Jason. I bitched at him this morning and he's like, well, look at the price you're paying. What do you expect? I said, I probably would have paid more, to be honest. So
Dude, hotels seems
well.
like they've gotten very expensive. Has anybody else noticed that?
Everything's
What?
expensive.
Oh, shit. Okay. I missed the. Nobody told me.
Eggs. I understand though, you guys that are buying Calmaine, you know, just don't capitalize the earnings. That's my only advice.
There have been a lot of there have been egg factory fires.
It's not great.
That's just called broiling a chicken. What are you talking about?
That's strange. Let me give some shout outs.
Mm.
There's a few here today. I'm sorry, everybody.
I got a shout out I got to give. Let me find this dude.
San Diego, Jamaica, Pakistan, Hamburg, Gothenburg, Sweden, Roseville, Vancouver, BC, Prince George, Denton, Texas, Gulf of Mexico. What's up? The platform in Israel. What's up?
Oh my God.
Ben from Berlin, Old York, Belgium, sweet dude, Nashville, Portland. This is a good spread.
Hey, shout out to Matt Commons, COMMINS. Guy's going through a tough time. You know what's getting him through it? Boom. Value After Hours.
That's what we do.
Sorry your life has come to this, but we appreciate you tuning in.
We are experts at getting through bad times. As value
That's
guys.
right. Yes.
Everyone will be tested at some point.
Actually, probably a good time would be the thing that would test us the most. I've never seen one, so I don't know what it'd be like. It'd be uncharted territory.
What,
Yeah.
good times?
Yeah, just value ripping for a few years.
Good
Just
times.
imagine
is
that
gonna
Blow up
feel-
and act like I don't know nobody.
Yeah.
Dude, it's going to feel like the night we met and we partied in that bar in Omaha late night.
Yeah.
It's
Let's
going
do
to
it
be
again.
great.
Speaking of which, I'm going to be there this year. Jake's going to be there. You coming along, Billy?
This part of the year, I always tell myself no, and then I
Yeah.
always end up there and have a great time. So the
Buy
answer is
yourself,
yes.
buy future Billy a gift,
Yeah. Come on.
I'm going to
and
go.
just forget about it, and then be like, good job,
Stop teasing yourself. Just get it booked.
good job, past Billy.
I'll be at the Harrah's like I am every year because I'll wait till the last minute.
No, see, I've done that once, and that was enough.
That's where I go every time.
I don't know if I like that smoking in the early morning.
Yeah,
Smoky
I
air in
like
the early
it.
morning.
I like it because if I walk downstairs, I feel depression immediately, and then the day can only get better.
There you
Okay. The
You
bar's
know, I like
low.
to hit my planned bottom quick.
go. Losing money with friends. That's us. What's up?
I usually stay out of the Harrods, which is good. Although last time me and Scuttleblurb dropped down a couple bets. It was pretty fun.
It's
Just
always a
add
good
to
time.
The hotel room bill.
Well, and maybe this time we'll no, we're not. I was gonna say maybe we'll plan ahead a little bit further for a get together, but let's be real, we're not gonna plan ahead.
That was
We
a pretty
should
good
do that.
turnout. That was a fun turnout.
Yeah.
I've got all my notes on my phone, which I left at my desk. I'll be 2 seconds. What are you talking about this
Stretch
week?
it, fill out the air.
Hey, Phil.
Yeah, I got.
What are you going to talk about? Let's hear what you talk about.
I've got a piece on a speech that was given in 1986 by this researcher named Richard Hamming, who I found very inspiring. And it's just kind of like talking about how do you find important problems to work on, and how do you who makes truly breakthrough discoveries, and what do they have in common? And I think it might be good. Might relate well to the investment research process. So we'll see.
Oh, I was thinking that it would relate to me finding meaning in my life, which would be nice if you could help me do that.
We could do that too.
Yeah.
Let's do that.
Why not?
What you
Toby,
got, Billy?
what you got? Value spread, all-time high?
What you got?
Value spread, all-time high?
Where's that yield curve at?
Fellas, coming. So I got a few interesting ones. These just like short notes for general discussion. But I saw a tweet yesterday that I just can't open for the life of me. But the last week was the first time that we have gone back to 50% occupancy of
Back to work.
offices. Yeah.
Yeah,
Since before the pandemic.
yeah.
Isn't that amazing? Like we're only back to 50% now.
Well, what's
This-
next? People have to wear suits to work?
No, no.
If it gets
don't go
gnarly
that
enough
far.
out there.
Not sweatpants.
Yeah, I thought that was wild. Like that's got to have some implications for commercial real estate and
Starbucks got to be back, right? Does that help them?
Starbucks. Yeah, that's got to hurt everybody, right? It's got to have massive knock-on effects. How's that not turned up in any of the data yet?
I don't know.
Well, that was part of why I avoided Starbucks, actually. Like I remember the Starbucks that I used to work on this corner in Chicago, and it was BMO, then Bank of America was right next to us, then Northern Trust was right across the street from there, and then I think it was it wasn't Fifth Third. I don't know who it was. It was a private bank, I think. Anyway, like we go into Starbucks the whole freaking day. And I just thought, with the potential for habit to be broken and the throughput in the stores going down, that was wrong. I was wrong.
Well, I guess my question would be,
Imagine
does it
that.
just shift? Like, do you still have, now you need to get out of the house, so now you go to your local rather than the one that's downtown?
Yeah, and I think with the drive-throughs
It's
being
drive-thrus,
open, they
for
provided
sure.
people
Drive-thru.
somewhere to go when you couldn't go anywhere else. So I missed it. Whatever.
Was it Dutch Brothers? Are they doing the drive-through coffee? They had the massive multiple for a while. Is that still? I saw my first one summer last year.
Oh yeah.
It had a big
Probably
lineup.
worth looking at now.
Yeah, it's definitely gotten cheaper from what it IPO'd at, whatever, like a year and a half ago or whatever.
I like
but
those businesses though. They're good businesses. Coffee, like
it's a good
for all the
business.
reasons that Buffett likes Coke.
Returns on
Well,
capital are strong.
yeah.
It doesn't take a ton to set one up.
Huge
but
margins.
yeah,
That's
good
actually not
margins.
Addictive.
down much.
I know I keep my eye on it, but thus far it's not really gotten. Here's my issue: is that from here, you are betting on a lot of expansion from the West Coast, and if C's has taught us anything, it's that even great brands don't necessarily travel. And Coke obviously did just fine traveling all around the world, and for whatever reason that worked, but C's Candy didn't. And what travels and what doesn't, I don't think is all that easy to predict. And so if you're betting on it being able to go and push past east of the Mississippi, which you are basically, and this entailed in today's price, I don't know. That's not a bet I find all that attractive. I'd rather wait to find out.
I don't know that you need to look at C's. Dunkin' has been primarily an East Coast brand for a very long time. I know they're successfully expanding. I do kind of wonder, when you get a healthy valuation, the shareholder base is pushing to open quickly, right? Because that's how the math has to work.
Yeah.
So do you have to your point, like, do you have to force the opening in an unnatural and potentially unhealthy cadence?
Yes.
It's weird, man. I have these same thoughts about Disney. I've been bitching about this for over a year now, but like, I just wonder if that company wasn't public and it didn't have the shareholder base that I think it has. Might the food in the parks be like a little bit better? Might it be a little higher quality? And might you be able to actually like give up a little bit of margin, but like really give people like, I don't know, real experiences that they'll pay for? Like, I just feel like they've sucked the joy out of that park. And I blame a lot of it for the incentives of being a public company.
There's always that temptation to make the expedient, short-term decision in any public company. And I think that's the ones that don't think that way are kind of prove the exception to the rule. Unfortunately, I think.
Yeah. I mean, we'll see. Obviously, Iger's back and maybe he changes it, but Chapek was the Parks guy, right, under Iger. So I don't know. It's interesting.
It's
Where
very
I'm
hard
from,
to change the culture once that permeates as well. Where you're, I mean, look at GE as sort of the pinnacle or the canonical example of that in, you know, mid 2000s, where it seeps into the accounting, it seeps into the entire operation becomes focused on hitting that next quarterly beat by a penny. And somehow they're able to keep doing it, and they're tap dancing to Wall Street's tune.
We're going to need $20 million out of some of those acquisition reserves for this quarter.
Yeah.
You're just going to have to find it in there.
You're just going to have to go find it somewhere. Like that's, boy, you once you start that, I think it's really hard to wring that out of a system. That's a bit, yeah.
Well, it turns out it's true, particularly for GE.
For Disney specifically, you know, I live in an area where we're close enough that you get a lot of the regional people, and there's so many that I talk to that are now actually SeaWorld comes up a lot as where they take their family because it's cheap relative to, and Universal has picked up just a ton of season pass holders that used to be Disney pass holders that now they go to Universal. I went there with the kids. I will follow up on my previous story. Lot different when you're with the children than when you're partying. I thought to myself as I waited over an hour in that one line, would I be mad at me for skipping this line? And I determined I would be mad because I got mad at a grandma that was going after her lost grandchild. But I still think that I still think that I'm okay in the karmatic universal. I'm not sure I need to find God like the person told me I needed to, but I will admit that, you know, certainly intoxication led to some potentially bad decision-making on my part the first trip, but boy, was that fun. It was fun with the kids too, man. Harry Potter Land is special.
I got another one. Retail participation is back to levels that we saw in about April last year. This is zero hedge. So put your own spin on it. But the SPX retail buy interest is back to where it was first quarter last year.
So SPX, this is going to be a really stupid question, but what is that? What are we
500.
measuring here?
Volume.
Flows, is that what it is? Like,
is it options also? Because like these daily options that have blown up, these things are fucking crazy.
Do you think that's doing something to the, so that this is a little bit more esoteric, but do you think that's doing something to the vol, to the VIX?
Delta hedging stuff.
According to the guys that I talked to, the problem with the VIX is the construction is completely crap. They say there's two VIX products. One is a 3-month VIX product, and they said that's excellent, but that's not the one that's marketed because it's not the one that drives fees. Because if you have to trade 12 contracts a year, that's better for SIBO than if you have to trade 4. But they said it's like a way that it's a way the VIX is constructed. And they said that the daily options don't have enough theta decay in them really to influence the vol structure. This is the conversation I just had. So
okay.
I'm only parroting somebody else, and you're only getting my interpretation of what they said. So
for those of us who are just tourists in volatility, theta is just time, isn't it? That's just not enough time. It's a day.
That's
it's
correct.
Yeah.
You are no tourist, sir.
Well, I never want to get caught by one of the guys who actually knows what he's talking about.
Yeah, that's fair.
The P&L says otherwise.
Yeah. I mean, by a tourist,
I've lost a lot of money in vol. That's true.
As have I. A rite of passage in finance.
The thing is, it's got that, it's got that payoff structure where you're supposed to lose a little bit of money.
Yeah, no problem.
Every month, which I'm good at that. So I did lots of that for a long time. And then you're supposed to get this big payoff. And I've had 3 big payoffs because I've done it in different products. I've done it literally in the VIX. I've done it in SPY puts. I've done it in VIX calls, SPY puts, and the HYG puts as well. And I've got paid 3 times and I've never collected on it because in every instance,
mean you've been in the money 3 times?
I've been way in the money, like 30% of the portfolio in the money, and then it's run out by the time. So
it's those that goddamn European options on those. That's the problem.
Well, I could sell it out. I could get out. It's just when you get that they've all been little moves. Like it's all of the moves between here and, not last year, obviously. It was probably the last one I did was 2018, something like that.
Yeah,
I
they're
had,
quick. You got to know when to cash it out.
Well, here's the thing though, like when vol gets trending, like that, the 30% of the portfolio becomes like 300% of the portfolio at some point.
You can't take it off too soon. This is your one shot.
That's
Finally
right.
got some coin. Yeah. Anyway, didn't work.
The story Jason Buck told yesterday about how he started to come up with his fund. He was in commercial real estate, and that shit the bed in 2007, 2008. And because he was close to the industry, he put like basically his remaining money on shorting in the options market, like the banks or whatever.
Okay.
And he was right, but he didn't understand vol. And even though he was right on the direction, he lost everything again.
Wow.
So he's like, I went broke, and then I went even more broke with the right call. And that was my options education. I said, yeah, that sounds about right. I have a buddy who I always tell him, like, he thinks he can make directional calls and express it in options. And I'm like, dude, volatility, you're going to get screwed because you don't understand vol and how theta works.
If you hold it to expiry, you should get paid. If you're right. And you can always do it, you can do it part in the money. So it's like a big levered bet. There's lots of, I don't want to encourage anybody to do that stuff.
Yeah, this is not investment advice.
That's right. This is a way that you can really wax yourself.
I mean, I have a friend who I shouldn't say he made his year, but a big contributing factor to his year last year was in out of the money calls on Maxar. But like he had a view on a transaction, right? So that like he thought the options were mispriced. I think, boy, you better have a good sense of why that option's mispriced rather than I feel like this direction is going this way.
Speaking of retail, I happened to look from when Tesla joined the S&P 500. Any guesses as to how it's performed since then?
Since it joined? Is it down since it joined?
I think it was November 2020 is when it joined.
Oh, okay. So I think the peak was close to January 2021. So January 2022. Sorry. So yeah, it's probably down. How much is it down?
So December 21st, 2020 is when it joined, and it's down. Well, this was as of a couple days ago, but down 19% since joining the S&P 500. No, Tesla.
Oh, Tesla. Sorry, my connection's unstable, and I went into the matrix for a second.
I bet Salesforce is probably a similar looking thing for the Dow and swapping Exxon out for Salesforce.
Yeah.
Oh.
Yeah.
Has anybody ever run, it's a committee that makes those decisions about what goes in and what comes out. Like there are rules, but their rules are sort of not necessarily quantitatively followed. Has anybody ever looked at?
I don't think they can be either with like, if the size of the indexation of the market gets up to a level where you all of a sudden have to buy, let's say if even a couple percent for Tesla in case, like it was the biggest one I think so far, but if you have to put that much money to work that quickly to make it part of the index, like you could just end up with these crazy market swings. So they have to figure out ways around that to like ease into it, to who do they decide to pick or not? I think it's a lot less quantitative and strict discipline than what we might imagine.
But isn't that two questions? Isn't that like one of them is how you trade a fund that matches that index, which that's kind of what you're talking about there. Yeah. And then there's just like managing the index. So they just make decisions about what goes in and what comes out. And they've done stuff like they didn't include Google because they thought it had run up for the first year or so, because they thought it had run up too fast. And I forget that what the problem with Tesla was probably something similar. They thought it had run up too far, but it qualified. And there was some debate over whether it would actually get added or not.
I don't know. That hasn't worked out so far. Let's just say
that's been a good strategy for lots of people. Like lots of people are aware that you buy the stuff that falls out of the index and on the guess that it'll be re-added in the next, over the next few years. Well, particularly down in the smaller
I don't know
stuff.
if it's the re-addition as so much as the forced sellers who are tied to that index product. If you get bumped out of an index, then there's a bunch of sellers who, or a bunch of holders who need to just puke it right away to stay on, to meet their mandates. And there's probably a bunch that also do it just to stay closet indexing. So,
Well, I used to do that, like when stuff fell out of the Russell 2000. Like, I don't know how many people are watching the Russell 2000, half a dozen blokes in the entire world. But when stuff fell out, like you could buy it and then you just wait a year or 2 or 3 and it gets re-added to the index. And that's your exit. I don't know if anybody's tested that strategy. I think it works pretty well, provided it's undervalued when it comes out. Do you guys want to do some market prognosticating?
no.
I like the idea of buying into uplists.
You
Yeah.
had something to add then, JT?
No, I don't. I was just joking. We can prognosticate if you want.
So this is from GMO. This is from Grantham's latest bit. Rate cuts after great US bubbles. So again, Grantham. So everybody who discounts him can immediately discount him.
Yeah, just tune out now.
But the he's got the day of the first rate cut for December 1929, subsequent drawdowns in US stock market 79% after that rate cut. And the date of the market trough was 3 years later, June 1932.
So let's back up a little bit. What he's talking about here is that historically, 29, 99, 07,
2007. Yep.
all of those time periods where everyone thought, oh, the Fed's going to come to the rescue with a rate cut, have then basically the Fed wasn't able to stop anything from happening, is effectively what he's saying there, right? But then continue. Go ahead.
No, that's I mean, I just have the chart. That's the entire point. Just that when the rate cuts come, that I think that's one of the things that many of the bulls are hanging their hats on here. That lower rates, in housing and in the stock market mean that the market turns around and rallies again. But that's not been the case historically, particularly in these big bear markets. The rate cuts sort of happen closer to the top.
Except for one instance of 73 where it didn't, like, it actually bottomed right as the first rate cut was happening.
And there's an argument this market is more like 70, like those early 70 ones than those other ones too.
Lest we think that there's complete precision in these these historical analogies. That there is not.
True. I guess that's all we got to do now is we got to fill for 10 months while we see whether the yield curve inversion worked or not.
Well, I don't know. I mean, does it feel like to anyone else that the upside versus downside seem to be skewed in ways that aren't as attractive necessarily? I mean, how much can you make from here versus how much might you lose from here? Just to try to answer that question.
I don't know.
What do you think? What's put a couple numbers to that, like your thoughts right now.
Well, I think that I mean, this is a natural thought of anyone that likes the idea of stock picking, but I was going through Manual of Ideas, their best ideas. Shout out to John and them. I mean, I think there's some good pitches out there. I think that, Roku, Jesus, that thing's ripped 43% in like a fucking month.
All that stuff's up amazing.
Yeah.
Kavana's up 100%.
Yeah. I mean, Warner Brothers, but like, I don't know where I think the opportunity is, but I know that I think there is still opportunity. Now, something like Microsoft, the probability that it's a better short over the next year than a long, I think is pretty high. And when I say pretty high, call it 60-40. I don't actually have any strong beliefs on this stuff.
Yeah.
But medium term, like, that business is getting more, if their disclosures were real, that business is getting more and more relevant in people's lives, even now. And, if you need to trade down in your total aggregate spend, having an E05 product or whatever the hell they call it, versus, like individual products, I could see the strong being stronger coming out of this with really good businesses where 3 to 5 years out, you look at it and you say, okay, that was actually a pretty good time to buy. But, the next 12 months, who the hell knows?
That's right. That's roughly where I get to too. I think that if you look at Greenblatt's little Gotham website, where he's got the forward 2-year return. So we've ticked down a little bit from the 90th percentile to the 89th percentile, but he's still saying your returns are.
Were they coming in at 50 or something?
Well, it's like, 58.7 something like that. 58.8. So like last week it was the 90th percentile at 60%. This week it's the 89th percentile at 59%. So it's still forward returns look really good, even though we rallied a little bit over the last week in that portfolio. I think that's right. I think that the longer term returns, like as we've discussed, that the 2-year returns and longer 3-year returns, 5-year returns are pretty good here. But the path that you take to get there could be gnarly. But then every single man and his dog thinks that. So there's no insight in that.
Hey, a short idea I saw on Twitter, like somebody just threw it out, and I think it's pretty interesting to think on, is Chegg. They're basically like the cheat sheet for colleges. Like, what does Chat GPT do to that business?
I had shorted that thing when I was doing a little bit of shorting. I haven't looked at it for a while. It's shortable. It was pretty gnarly when I looked at it.
That's actually the type of thing that I could see Chat GPT like not just disrupting, but disposing of.
Is that what Chegg is? Is it cheating?
More or less.
I thought they were like.
It's got like all the answers and stuff. So if you're a college student, you like pay and then you get the answers.
I hadn't quite understood that part.
Isn't that
I'm
what
sure there's a more
all about
altruistic pitch, but come on, how are people actually using it?
Isn't that what you would want in a business person though? Is like, find the cheapest way to find the answers.
I like the line about ChatGPT. Someone said it's like a newly minted MBA. It's very, very confident and it's often right, but it's also lots of little mistakes in there.
Yeah.
No disrespect to the newly minted MBAs.
Nah, plenty of disrespect to them.
Or CFAs. Apparently that's a hot topic right now.
Yeah.
Well, why is everybody going at the CFA?
I don't know. What is that?
Because the exams are everybody's studying for them.
Oh, okay. Has ChatGPT passed that one yet?
That's a good question, actually. It's because the thing that makes it hard is it's a closed book test, not that the questions are really that difficult, just that you have to memorize it all.
Yeah.
Yeah. You got to learn I had to learn how to do it. I couldn't memorize my way through that test, which is what I thought the benefit of the closed book. Like I had to learn how to think about the problems, not memorize.
I just think memorizing formulas is a waste of time. And I think that you've got to know which formula to use because you got to go so fast that you can't be looking everything up. Like you couldn't take in the 6 textbooks and look everything up as you went through it, right? You have to know what you're looking for. And then you're just going to find like, where's the bracket? Where's that's all I would have liked it for.
Yeah, I mean, I enjoyed the process a lot. I understand the merit of open book text. That's how law school was. Was that how law school was in Australia?
Yeah. You can bring in notes.
That's a good way to test.
Last Tuesday, while we were recording this, that was the biggest short covering since June 2022. I mean, who gives a shit? June 2022, so 6 months ago.
Whoa!
Yeah.
So what's that mean?
Well, I guess there was a lot of short covering over a short period of time. So I thought it was a bit longer than that when I started reading it.
Feels like some animal spirits are back, at least in the trading world.
What do you think caused that?
January.
Yeah, January. I think that what happens is you get the short start covering at some point, and then people misinterpret that as the bull run has begun and people pile in. But then I could be wrong. Maybe the bull run has begun. Maybe October was the low.
Yeah.
Who knows?
Yeah, I think you get a combination of January and FOMO and you can get a lot of rips. I also think, a lot of stuff is arguably cheap, and I don't know. We'll all see how the path looks going forward. If anyone knows, let me know. I'd love to know the answer.
It's been a fair amount of, Skinner box type of conditioning of pigeons in the buy the dip mentality for the last, last 12 plus years.
Yeah. I mean, the risk reward, like on something like Warner Brothers, it it's not the type of thing I want to own anymore. Like I'm not that interested in that, but I get why people bought it down, certainly below 10. And I even kind of get why they buy it here.
Why are you, when you say that type of thing, that sounds like there's been some evolution in your investing strategy. What are you, what are you trying to get to?
I can't get comfortable with a business with that much leverage that has its core cash generation coming from something that's losing video consumers, 10%. And I,
Wait, are we talking about Curate now or?
Well, but that's the thing. So like with Curate, the argument was that the cohort would remain stable, right?
Mm-hmm.
And that customer decline would be a lot lower than your cord cutting because they skew older,
right?
And their disclosures of minutes watched are going up. I don't know, man. Legacy media with that much debt scares me. I mean, it's also why I cut the cord quick. Not to, what a pun, but it's why I didn't have a whole lot of, I'm not sticking around and Curate to find out what the end looks like, right? I had one thing that I wasn't willing to bend on, and it would have forced me to bend. So I don't know. I just think it's a very hard, an interesting dynamic. Is I think when Warner Brothers comes out and says, I'm going to license, and then the shares respond like they have, I actually think it really solidifies Netflix's competitive position, because now the incentive is like, okay, well, license to Netflix. Paramount's got the same issue. They have to service debt. I don't think their shareholder bases are particularly patient. It's just kind of an interesting thing to watch.
I don't know how you guys wrap your mind around media. I find it really hard to imagine what the world of that looks like in 10 years.
Yeah, I don't know that I'm any good at it. So
I know I'm not, so I just stay away, but I'm jealous of all these other people, because it seems like when you figure it out, there could be very, very good businesses inside of there when you understand it, but I don't know. Too hard for me.
You don't have to make any decisions now, though. Yeah.
What'd you say, Billy?
It's nice to have subscription revenue, right? Like it's a nice business model, but the cost, it's a cost issue right now. So we'll see.
When Netflix does, they've allowed people to share passwords forever, and they're cracking down on that a little bit, which that shouldn't be that hard to do. You just have one device using one password at a time, right? And that you could turn that on at any time. Do you think, what's their thesis there, that when they were growing and they were just, that was when we're in that high growth, it didn't matter, and now that they want to switch it to profitability a little bit, but they can't imagine that everybody who's sharing is going to start buying a new subscription, right?
Oh, maybe enough to, when your sub numbers stall out, you got to figure out how to keep them going, right?
That's a good point. Yeah.
Yeah, and you might be able to say, I hear $3 more a month, and you can keep your profile on your parents' account, and you get a couple more bucks. I mean, I think the thing that is so shocking about Netflix to me is for the longest time watching that business, didn't understand at all what they were doing. And watching the debt markets fund that, I thought was so stupid. And now when you see what they built, and maybe this was just like the 10% chance that worked out, but from a capital allocate, from an allocation of equity perspective, for them to build that business and to have debt finance that risk, that is fucking impressive. That is an amazing business story to me. Obviously, it carries the valuation it does because of that, but that's not something a younger me ever could have seen.
Is there a matching to that, though, of the production of the asset? Let's call it a piece of content. You pick whatever favorite show, and then using debt to finance it, and then the duration of the cash flow to match the liquidation of the debt. Is that work? Because I feel like this stuff is it ages like lettuce out on the kitchen counter. Is there a longer tail to this than I'm giving it credit for?
Well, I think that I think now the machine is able to continue to spit out content. I don't think you're not counting on like previous movies to retire your debt, but I mean they're super under levered. They're only like 3 times levered on a cash flow basis at this stage from a debt perspective. If you're an equity guy, you can say, oh well, how much of that's share-based comp? The debt market doesn't care about share-based comp. It's true cash to debt. So like that business is very conservatively financed at this point.
I guess that debt Hail Mary kind of landed in a way.
Yeah, that's what I don't know, right? Was it a Harry that landed, or was it something I didn't see for a long time? I'm not sure what the answer is there, but it's a hell
They
of
must
a
have
sport.
a pretty good. They must have pretty good analytics in the back end that they can see. They can direct their investment to the stuff that pays off. So you get season after season of like Emily in Paris. The other things get chopped pretty quickly.
Yeah, I suspect they're better at having an idea of what like an existing syndicated sitcom could do as opposed to creating something new. I'm not sure that they're that good at creating new stuff.
Have any of the Netflix shows gone into syndication on cable?
No,
Do they do that?
not yet. But I wouldn't be shocked if some go to Roku. Like Roku's desperate for content on their channel. They just signed. Warner Brothers just had a release that they're giving some, I think like 2,000 hours or something to the Roku channel. Roku needs that.
JT, do you want to do your veggies?
Sure. Do that. So this is from a 1986 talk by this researcher, really a giant in the field of computer science and mathematics named Richard Hamming. It's called You and Your Research. And this guy's background is very unique in that he worked on the Manhattan Project at Los Alamos in 1945. And then he joined Bell Labs in 1946. And he worked there for 30 years. And he was involved with almost all of their prominent achievements. And then at the end of his career, he taught at the Naval Postgraduate School for the rest of his life. But, you know, in 1986, he was invited to give this talk, and it was called You and Your Research. And it really centered around this one question: why do so few scientists make significant contributions and so many are forgotten in the long run? And he's trying to untangle this. And Hamming worked with like the who's who of scientists in the 20th century. I mean, he worked with Fermi, Feynman, Teller, Oppenheimer, Beth, while he was in Los Alamos. And then he shared an office with Claude Shannon while he was at Bell. So like he gets to see up close all of these people who had truly breakthrough research, and what do they have in common? And so that's what he's sharing in this talk. So he starts off with this common belief that it's all about luck, right? Like it's the right person, or they're the right place at the right time, and that whoever was there would have figured out how to do whatever it was that was done. And he said based on his observations that luck is part of it, but that it's not that at all, and it's really that there's more having that prepared mind. It sooner or later it finds something important, and then it does something with it. We said one of the characteristics you see is that many people is that they usually when they're young, they have these independent thoughts, and that they have the courage to pursue them. And so a lot of times, like the younger people are the ones who make these breakthroughs because they don't get stuck in the old guard of doing things. He said maybe is it about having a lot of brains? Like obviously there's sort of a minimum level of genius to be in those hollowed grounds that he was walking in, but he said that's not enough. And actually there's a lot more to it. And that a lot of it is actually just about them having courage to go after things and work on important problems. He said a lot of times that like the working conditions were sometimes they appeared to be like a hindrance, but they were actually what helped you unlock. Like there was these constraints that inspired creativity. So he was talking about how like some researchers in his department when he was at Bell Labs, they're given this like these small underpowered for the day computers, and they wanted to find ways to make those machines like actually get good work done. And they came up with the system to do it. And that's actually what Unix was born. And that's been used ever since in all kinds of applications. So he says like what appears to be a fault often by a change of viewpoint turns out to be one of the greatest assets you can have. So if you look carefully, you'll see that often the great scientists, by turning the problem around a bit, changed a defect to an asset. So he also says that the great scientists all had tremendous drive. Like they were just always working. And he said that like knowledge and productivity act like compound interest. And, given two people of approximately the same ability and one person who works 10% more than the other, the latter will be twice as he'll outproduce the former by 2x. And he said, the more that you know, the more that you learn, the more that you learn, the more you can do. And the more you can do, the more the opportunity. And it's very much like compound interest. And so he's starting to sound a lot like Buffett and Munger, right? Like that all of these things sort of compound together. The one person who manages day in and day out to get in one more hour of thinking will be tremendously more productive over a lifetime. So he said that one thing that existed between all these people is that they were able to tolerate ambiguity more than others. So he said, like most people believe that that something is or is not true. But he said the great scientists will tolerate ambiguity. Like they'll believe a theory enough to go ahead, but they doubt it enough to notice the errors and faults so that they can step forward and create the replacement theory to it. So if you believe too much, you'll never notice the flaws. And if you doubt too much, you won't ever get started. And so it requires this balance. He has this great line that great contributions are rarely done by adding another decimal place, which I think is, he believed in harnessing the subconscious. Says if you're doing a deeply immersed and committed to a topic day after day, you're just thinking about it. He said your subconscious will have nothing to do but answer it in the morning for free. So he adopted what he called great thoughts time. And so after lunch, every Friday, he would dedicate that time period to only discussing these big, great thoughts. Like it wasn't going to be small stuff. So dedicating 10% of his time to these big ideas was important for him to unlocking, these big breakthroughs.
That's how he invented shoes with zippers.
Is that what it was? So how about working with your door open versus closed? This is an interesting observation. He noticed that if you have your door closed to your office, you get more work done today and tomorrow, and you're more productive than most over a shorter period. But 10 years later, somehow you don't quite know what the important problems are to work on. And after all that hard work, you end up sort of in a tangential to importance. So the people who had their doors open, they had all kinds of interruptions they had to deal with, but they occasionally get clues as to what the world is and what might be important to work on next. So there's this trade-off to it that's kind of interesting. He said that he's a very egotistical person, and he used that to his own advantage. So he said most people, when they look to take a sabbatical to write a book, they don't finish it on time. So before he left to do his, he told everybody, all of his friends, that he was going to come back and that book was going to be done. It was going to be great. And he knew that he'd be ashamed to then come back without it. And he used his ego to force himself to believe to act in the way that he wanted to act. So he found out many times that he was like a cornered rat in a trap, and he was surprisingly capable when he set these kind of things. I don't know if that's going to help you, TC.
Thanks,
for your book. So he said, if you're going to be a first-class scientist, you need to know yourself, your weaknesses, your strengths, and your bad faults, and be able to counteract them. And I mean, how often do we talk about that in the investment world? Interestingly enough, like how much should you read? You hear Buffett say like reading all day, Munger. Hammack said that if you read all the time what other people have done, you'll think the way that they thought. And if you want to think new thoughts that are different, you have to get the problem reasonably clear and then refuse to look at any answers until you've thought the problem through carefully for yourself and how you would do it. And then you could slightly change the problem then to be the correct one often. Whereas if you're only reading everyone else's versions of it, you're never going to really think of what's truly possible. You're just going to have everyone else's thoughts in your head. And then the last thing, he had this interesting, he said he advised that you should change what you're working on the significant things like every 7 years. And you need like a complete shift in your field. And that doesn't mean like going from, theoretical physics to English literature or something. In his instance, he went from numerical analysis, he was a mathematician, to then hardware in the computer space, to then software. But he said, when you go to a new field, you have to start over as if you were a baby, and you're no longer this big muckety muck who knows everything about a field. And starting back over, you get to start planting those acorns, which will then become giant oaks in that field later. So just like looking to shift your focus every 7 years, he thought was important because he saw guys, and actually he said this happened with Shannon, where they had some huge breakthrough in their field, and then they were kind of stagnant after that, because like, how do you top that ever? You have to go somewhere else and maybe bring the tools that you learned there into the new field and then make new unlocks. So I think the investment research side of all of this is kind of obvious, and we don't really need to like plow through it, but just fascinating to the insights from somebody who saw all of these successful people up close, working with them on a day-to-day basis. What were the commonalities between them? And then what can we do to be closer to our big, what the most important things that we can work on.
What's the name of the talk or the book?
You and Your Research is the name of the talk. You can, it's available for free online. It's you could just Google it. I think the University of Virginia has it hosted and written up.
And what's the gentleman's name?
Richard Hamming, Hamming.
That's cool. That's good stuff. That's very Buffett-like.
It's all very, very Buffett-like, which sort of speaks to, I think something we talk about is like, there are often these sort of fundamental truths that reemerge in different contexts, different people touching the same elephant, but that they exist in a kind of in an absolute sense of like, yes, this is sort of a fundamental truth about the way the world works. And, we see it show up again and again in different forms of greatness. And I think Hamming had his finger on the pulse of that in a pretty serious way.
Did he have any great insights? Did he?
Oh, tons. Like, he was a prolific researcher. There's all kinds of Hamming, Hamming code, Hamming ... He said that you might find this kind of funny. You get attribution, right, for being the first in somewhere. And he said, if your name is capitalized in the thing, then it's actually not as big of a find. But when your name gets lowercase in then becomes part of that, then that's when you've really made a big discovery. So like amperes, right? Like hertz, for instance, like all of these they become units of measurement that we all use today in a lowercase sense, but it was a capital case person who came up with it. So if you ever get to lowercase status, you're the real shit then at that point.
Yeah, that's cool.
So there is actually Hamming code that's lowercase h, I think.
Any idea what it does?
No idea. Zero idea.
Yeah, that's good stuff. I'm going to have trouble relating it directly to anything that we're doing. So what do we do for a segue?
Could be getting that book over the finish line, my friend.
Wow, I'd love to do that. Yeah.
Let's get a public commitment right here.
Yeah, that's right. Tell us when.
Tie him to the mast.
Yeah. I don't know. Close.
Oh.
I'll get it done for Berkshire. How's that? I'll get it done by May. I'll say that.
Wow. All right. That's a strong,
it's aggressive
commitment. I like it.
Yeah, it should be. That should be achievable. Switch.
Well, go ahead. I was going to say we should dip into some Q&A while we're stalling.
Yeah, that's a good idea. But I was going to say I saw Chanos. Chanos said that the market had never bottomed this high before. Are there any companies that'll go bankrupt this year? Best BBBY.
Permanent new high plateau, no bankruptcies.
Bed Bath and Beyond.
Yeah, there are. I don't know who they are.
How do you have record debt and then record corporate debt, let's say, and increasing interest rates and not somehow get closer to the edge of more bankruptcies?
Yeah, there should be some.
I would say capitalism's not working if bankruptcies are too low.
Yeah.
Yeah, Bed Bath and Beyond looks like it's in a little bit of trouble.
Probably ripping on the news of bankruptcy.
It's down today. It's down. Well, I think it did.
Okay.
I think it did have a big rally. It's up January. Yeah, it's weird that those remember when Hertz got its cue and had the big rally? What's the thesis on that stuff?
I have no idea. I'm not that smart.
Yeah, I don't know either.
That
It's
everybody's
not a game I'm
been
trying to
scared
play.
out. Yeah, front running that stuff. Yeah, did you guys take a look at the Hindenburg piece on Adani?
No.
It's too
No.
long. I couldn't look at it either.
Yeah.
It's hard to know. I don't know. I saw their
What's
response.
it claiming fraud? I mean, that's usually what Hindenburg's doing, right?
They say that there's some hidden accounts and there's some trading between the hidden accounts and some other stuff like that. I don't know. I just thought it was very long, and I saw the Adani response had a little bit of like an attack on India. Attack on Adani is an attack on India, and I went, I don't know. Do you need to do that? If you're confident, you just buy back stock.
Yeah. Doth protest too much.
Yeah, a little bit. What about beyond Carvana? I don't know enough about how close they are.
Yeah, I don't know either. I mean, there's smart people that think they're going bankrupt. That I have no idea.
Carvana's funny because I think it's
What do you
quite
do with that information?
it's quite an interesting business.
You're going to
It's just-
short it to zero?
Yeah.
What's off a lot? Yeah,
That's, oof.
it's had a big rally. It's had a big rally over the last
Yeah.
everything. It's crazy the rally that we've seen. And I mean, hats off to Kathy Wood. She's had a blockbuster January. I think she's up nearly 30% for January.
Is that right? Wow.
Yes,
Kudos.
so Carvana's up 113% year to date.
There you go.
And it's only January 31st.
That's good.
What's the IRR on that?
It's up to almost $10. It's crazy. It's up 50% over the last 4 days.
No. So you're going to short that to zero?
Yeah, not me.
This is a difficult game.
Yeah, it is. Yeah, Hindenburg were right on Nikola, likely right on Adani. I don't know, but
These are all seem like 8-foot bars to me, not 1-foot bars.
yeah, they are hard, aren't they? Yeah, did you see the richest man in the world is the LVMH, as they call him in Emily in Paris. I'm sorry, I know so much about this show, but
Dude, this is getting,
JVMH. It's getting sad now, isn't it? As you can imagine, we're watching that for my benefit.
yeah, I'm sure. Yes,
Beyond's
dear.
financials do not look inspiring.
Which one?
Which one's Beyond's? Yeah.
Beyond, I mean, you've got even if you don't account for the inventory growth, I mean, this is not a company that generates much free cash flow.
You need to think
At all.
beyond the financials, Bill.
I guess. I guess.
Uber still doesn't make money. Yeah,
Just got to get scale.
I would, yeah, I would love, like, I think Uber's one of those things that should be a good business, but it's still not. Can't take a swing at it yet.
Well, I don't know. I mean, is there pricing power? I'm not sure. How do you get pricing? I guess if you have two competitors, Lyft and Uber, with some implicit.
How often do you use
eye-winking.
Lyft? How often do you use Lyft?
Well, I own a vehicle, so I don't use either one of them all that often. So, I don't, but when I'm traveling, I tend to Uber.
Yeah, I try to use both so to keep them honest. But you know,
Do
there's
you? Okay.
there just aren't as many cars using Lyft in the areas that I use it, so it's hard to find a Lyft at that time.
The cost structure in these businesses is nuts. Like I just don't know. I don't know why SG&A just doesn't go down. There's like no leverage.
Yeah, we'd never get like any like learning curve efficiencies on this, despite unit
Yeah.
growth. Just
And R&D in a lot of these things just seems like a hamster wheel that just continues to spin and get bigger and bigger.
Hey, Matt Commons just gave us $100. Thanks, Matt. We'll
Yeah.
bar and,
Fuck yeah, Matt. That's what I'm
in
talking
Omaha, you
about.
can come along.
Jeez, we might actually plan something and invite you. The rest of you guys can figure out where the hell we are.
oh man, we are a cheap date.
Yeah, that's right.
All right, we got.
All right, hit us with the Q&A.
I think they've been trying,
Uh,
Jake. The problem
oh.
is we just don't know anything.
We just it's just Q. It's no A.
Yeah.
How
All,
about
all Q, no A. That should go on a t-shirt.
do you know when the Adani response came out about Hindenburg, somebody said you should have a look at Reed Hastings' response to Whitney Tilson's.
Short Netflix.
Yeah, so that's a few years ago now. It was like 2010 or something like that. And
How'd that work out?
yeah, he had this sort of pretty classy response. And he said something like, we're both supporters of these charter schools, so I want you to keep your money, so I don't want you to be short this, which will mean that you'll lose money. So, and then he answered all of the questions, and one of the questions that he posed was, why has your CFO left? And he had a pretty good explanation for why the CFO left. And then the CFO wanted to become a CEO at some point, but he realized that he was working for guys who were younger than he was, and so that's unlikely that's your path there. Do you know where's the Netflix CFO now?
Roku.
He's the CEO of Peloton.
Oh, yeah. That makes sense. McCarthy, yeah. Right? Isn't that Barry McCarthy?
I think that's right. Yeah.
Yeah. Fair play to him.
Yeah. How do you feel about Peloton as a going concern?
I haven't looked in a little while. Simeon Siegel had a note out today. I think that they might be pursuing a freemium model, which is
it's called a bicycle. You just ride outside.
I think you get 5 classes for free is what they're experimenting with.
What about the bike?
Well, I think you need the
Still have
bike.
to buy the bike and then you get.
No, you don't have to buy the bike, but it's a better experience if you have the bike.
Why is that? Because the analytics go into the computer?
I think so. That would be my.
Do you still ride yours, or is it clothing?
I sold mine a long time ago.
Oh, you sold it?
Yeah, but I got love for Peloton. They got me through the pandemic. I like their stuff. The problem is, it's just not the best workout in the world.
What's a better workout?
Kettlebells.
You knew it. You knew it.
It is a pretty great workout.
You still in love with it, TC?
Almost every day.
Oof, beast mode.
There wouldn't be many days that go by that I don't grab one. I like them. I just think they're fun.
They are fun.
I like doing curl. I mean, I like doing snatches and cleans when I was a kid, when I was at school. So I like doing those things.
Yeah, I don't know. Peloton not looking hot.
The business or the stock price?
No, the business.
Okay.
But I don't know. It's hard to see when you're looking at I don't know what's going on under the hood here. I'm not going to spend much time on it, so I won't have good answers.
I don't want to misquote Chanos here, but he said something like he'd never seen a market bottom as high as it is, as high as this one is. Yeah, bear market is doing something unheard of in my career. I've been on the street since 1980, and not one bear market has ever traded above 9 times to 14 times the previous peak earnings. Things are not cheap.
Soft landing would crush a lot of souls. So many people want the final flush. A soft landing would just absolutely crush so many people to see everything not implode. It would be funny. That's what I'm rooting for.
I think that if there's a soft landing, I will become the Fed's biggest cheerleader, because I will have been 100% wrong, and I'll own that. If there's a hard landing, I'm going to go the other way.
What's a hard landing though?
A crash, a flush. I mean, it's not, honestly, it's not their fault. Like I think these things are like natural occurrences. I think there have been business cycles going back to ancient times. But I think that they've created they've just exacerbated it. They've made it much, much worse than
we had QE into last year still. I mean, these guys were fighting the last war always.
I think you can delay it. I think you can push it out and you can make the bubble worse. But I don't think you can eliminate the cycle. But so far, it does look like we've eliminated the cycle.
But the things are going up and things are going down. There's a cycle. It's just, like quality assets are trading at pretty high prices still.
I have to wear a soft landing t-shirt.
I
to the
fail
Berkshire
to see a
conference.
reason
Yeah.
why that should not be true.
What if who has on their bingo card a soft landing economically, but the market still pukes?
Yeah, that could happen.
Or the other way around. The underlying is terrible, and somehow the market just levitates through it. That's more likely, isn't it?
Mhm. Is this that bad news is good news again that we lived through for
I
5
think we
years
did.
of hell?
Yeah.
More Fed intervention. Bad news is good.
The question that I always get, and somebody's raised this here, could go modestly lower and then grind sideways with chop for a long time. That's probably more painful for non-business speakers. I think that
Yeah,
I don't think that's
soul
ever
crush.
happened in the past though. Like people get tired of it. People get bored and disappear. I think that the boredom is the thing that kind of created all of the really high flyers through. Boredom created that stock market bubble, and then boredom kind of killed it as well because there just wasn't as much action.
Hard to have more action than 2020. That was action packed.
That was an action year.
2021 had a lot of action too. There's some crazy stuff happening.
2022 was kind of sleepy, even though it was down 20-ish% or almost
Quiet.
20%. Yeah.
The market quiet quit.
Yeah. The VIX went to bed. Don't think it's woken up yet either. That's time, fellas.
We made it.
We made it. Thanks, everybody.